For the weekend of August 9th and August 10th, 2014, let's take a look at how markets closed on Friday. The Dow was up 1%, Nasdaq was up 0.83, S&P 500 was up 1% also, and we see that the VIX was down about 5%. For the week, S&P 500 was up 0.33%, and for the week the Dow was up 0.37%, and we see that the Nasdaq was also positive for the week. It was up 0.42%. Before we go to the analysis for the charts, let's take a look at what we are going to be looking at. We're going to be seeing lots of examples of this, and this here I have the RSI. Let me just make sure this is now, we're looking at an RSI, and what you're going to see is that once you've established an area on the RSI where a stock or a market has been finding support, in this example here, which is a green line, and another support here and here, if you ever get another opportunity where the market could have a possibility of either bouncing on that line or maybe even breaking down, you always have to be aware that it is very conceivable that the market actually finds support on the very same line that has been holding the market or a stock together. This is going to be evident on most of the daily charts for most of the charts we're going to be looking at, and it's because this is where the market has been finding support on a predetermined line on the daily RSIs and also on the weekly RSIs, and I'll share that with you here briefly. So let's begin by taking a look at the Nasdaq daily, and remember we are talking about support coming on a predetermined price level, and you can see on this chart that the Nasdaq has been finding daily support on this green line here, and this goes back to all the way even back to 2013. You can see lows every time the market bounces off this line here. We get nice entry back into the long side every time without fail. This is where the market has been finding support every time. Consolidation here on the line, back above it, uniform activity, entry point there, support here, lows there, and over the last week or so we see that the daily has given us another rebound possibility. So we have to assume that the market wants to go higher because it's found support on the line that has been giving it support going back to 2013 probably and beyond. Also, additionally, we see that this level here, the previous buy point, has held. So the previous breakout of 43.57, the market seems to be holding above that, and we seem to be holding firmly around the 50-day moving average. So that information should be telling us that the market actually is looking to go higher and not looking to sell. Now let me go back to that daily chart. We have to be careful here, because if we wake up Monday morning or at some point and we broke that trend line, so if we break that trend line and have a serious break below what has been support, then the market goes down. But for now we have to act on what we see, and what we see here is support coming on the trend line, very simple line which has been very successful, and we also see that the market is now showing a double bottom on the line. My thinking here is we should go higher. If you go to the Nasdaq weekly, and what we see on the weekly is that we seem to have found support back above the 10-week moving average, and we also found support on this previous breakout level of 43.36. So holding above the 10-week moving average, also holding above the previous breakout level. Seems like a market that is healthy as of right now. And so let's take a look at the hourly for the Nasdaq. See what we got here, and we see that over the last week or so we've held this line here on the hourly. This has been successful support going back the beginning of August here. So looks like the market is now forming some type of a base, maybe something like that here. So we are going to see whether we are going to eventually break out with a nice move higher or break down with a bearish drop. The one thing I can add here is that the MACDs seem to be wanting to move back above zero. So if they are both above zero, momentum should be back to the long side of the market. If we take a look at the Dow weekly, we see that the Dow is holding very close to that 50 level, and that 50 level is where it's been bouncing since 2013. Since this entry point here on the way up, market has been bouncing on the 50 as far as the Dow is concerned. And you can see also here we seem to be holding and wanting to hold that 50 level. So that's one way you can look at this. Another way is to draw the entry point on the way up, which was this breakout here and this entry point beginning of 2013, and to draw a straight line which just happens to be around the 50. And remember, we talked about at the beginning of the video, if you establish an area in the market where you are finding lows and support, next time you come back to that level, you have to assume that support is going to be the first thing the market is going to try and do, unless it can break down. So we see that this could be an area of support, and this up week could be the beginning of that recovery leg. Also, we talked about this line here on the previous weekend analysis video. We talked about the entry point on the breakout here above the declining top line. So we're talking about this breakout here was a nice entry. Extend that same line, and you see that it's been acting as support every time the market has been bouncing off this line and back above it with uniform action. The market has gone back to the rally mode. So you see here, recently we touched it and moved higher, and right now we are holding firmly above that same level. So we have to conclude here that even on the weekly, the market wants to move higher. Also, there's this line here. So this previous weekly closing high going back to late 2013 of 16,478 is where the market was testing, just like the Nasdaq, and we seem to be holding above that line, suggesting that yes, the market has seen a pullback, but it hasn't necessarily broken down. If we take a look at the Nasdaq or the Dow daily, and we can see we bounced off the 200-day moving average. Everybody knows that, which is good. And also you can see that this low here, this nice low here, came when we moved above this level here. So when you moved above that level, and so we draw a straight line from this entry price here, and you can see that we are back above this general area here. So we are back above that level. That could be a buy signal. And actually, if you extend this line backwards, it makes a lot of sense, because it gives you the low here, which was this nice low, and also gave you these lows and these lows in the price here. So moving above this line here has been successful for the Dow going back to August of 2013. Now if we take a look at the Dow 60-minute chart, this is where it's been finding support on this green line here, and very successful support. If you go back and test even the most recent support, which was here, and every time we bounce off this line like we did here, it gave you a short-term low. We bounced off the same line here, gave you this low, bounced off this level here, gave you this level. And where do we get this green line here? This green line comes from the perfect entry point when it broke out above this declining RSI line here. So that was a perfect entry point, which is this lows here. And so we draw that green line coming off that same level here. So now that we are above the green line, seems like the market has, to me, given us a buy signal already. And actually, if you are with me throughout the course of this past week, we were expecting this market to bounce, because we already saw uniform activity below the line, back above it, which is the reason why, in my opinion, we had a relatively good session on Friday, because of this support having been seen on the hourly. Also, you'll see that on this chart, the market was making lower lows on the Dow, but the technicals were making higher highs. So that positive divergence is also another reason why the market did have that good Friday session. You can see here on the 30-minute chart for the Dow, we made lower lows on the 30-minute chart, but we made higher highs on the 30-minute RSI, which means that this was improving technicals. When prices are making new lows, that was opening the possibility for the market to move higher. We also seem to have broken out above this wedge, so we can say the market was forming a wedge here and here. Seems like the market has moved above that wedge, which could be another indication of short-term breakout. Also, the market moved above the declining RSI top line. So if you take the highs of the 30-minute RSI, we seem to have moved above that line, which could suggest again momentum coming back to the bulls. If you take a look at the transports weekly, you can see that support comes from this line here, and we touched that level at some point during the week and we held, so that's good. Also support on the RSI lows line here. As you can see, we are very close to holding that level. If the market can just bounce off that line and move higher, then that is going to be confirmation of strength, because this is the lows line that has been holding the market together. As you can see, the most recent support came here, which was the lows of April, and also here, which was the lows of last summer, which was somewhere there. So this has been successful. If we do it one more time, then the market should also continue moving higher. The Dow transports daily, again, remember we talked about support coming from a well-defined line. You can see this green line is where we've been finding support. We came close here, which were those lows. We bounced off the line here, which was those lows, bounced off the line here, which were those lows, off the line here, which were those lows, and again off the line here, which were those lows. So very nice line, which brings us back again to the example that I had shown you at the beginning of the video, that if the market is finding support on the same predetermined line, when you come back to it in the future, your first thinking has to be that the market could bounce off the same line. Now, of course, if you don't bounce, then the market has changed its behavior and could be changing its direction and trend. Okay, so now let's go back to the chart here and go to the S&P 500 weekly. And again, just like the transports, this line here has been where support has been coming in. Most recent, we held that level there, April lows, and if we hold that level, that could be a short-term low as far as the S&P 500 is concerned. S&P 500 hourly, just like the Dow, we were making lower lows in the price, but the technicals were improving, and we have also recaptured this green level here where the market has been bouncing very nicely. So all indications as of right now, without any more data, looks like the market actually wants to move higher. The biggest tell that has been keeping us on the long side this past week is because of the VIX, and you can see here the VIX on the daily gave a sell signal as far as I'm concerned, because it's back below this level here. It's been finding trouble holding above this level, and this line, you can draw the line like that. So every time over the last year plus, every time the VIX goes above the line and back below it with uniform action, that happens to be a short-term high. The last time we did that was here, when we came close to that line, which was resistance here, came close to that line, touched it and moved back, which was those highs. And you can see here with the double top above the line, back below it, that gave you that high. We touched the line here, those highs, and then also here, which happened to be these highs here. So let me remove that. Again, the VIX has been struggling over the last year. Every time it comes in this general area here, it actually sees a sell signal. So our thinking was all week long that the VIX was going to pull back, the market was going to be coming back to life. If you take a look at the VIX weekly, and you can see on the VIX weekly that resistance has been coming on this line here, And so if you followed me throughout the week, we've been expecting this to show resistance, and it looks like it's showing resistance because previously we had stalled here, which gave you a high on the VIX. The market was a buy. We stalled here on the VIX, which gave you the highs in the price here, and the market was a buy. We stalled on the VIX here on the RSI, tops of the price there for the VIX, the market was a buy. Double top here, the VIX made a short-term high and the market was moving higher, and this comes from this breakpoint. So where do we get this red level? Is because this is a previous breakpoint there, and that breakpoint happens to be this major high here. So everything seems to be making a lot of sense. The only way the VIX can move higher if it can spike above the red line or the red level where it has been stalling. So it was actually not a very difficult thing to see that if the VIX can stall again around the same level, then the market should be back in play, and that's how we've been positioning ourselves all week. The remaining portion of this video is from the market analysis after the close on Thursday. So how I called the market to subscribers on Thursday, and again we are using this method here. We were expecting the market to either give us a bounce or a break, and so we can go and take a look at the following video as an example of how we use that understanding of the technical analysis coming into Friday's session in preparation for what would be the next move in the stock market. Eric Muathe after the close, August 7th, 2014. Let's take a look at how the markets ended the day. Dow down 75 points, Nasdaq down 0.46%, S&P 500 down 0.36%, and the VIX was up about 2%. So that's how the market ended, a relatively down day. So now let's take a look at the same charts we looked at yesterday just as a follow-through. And I think the theme for this is not much has changed despite the half percentage point down day. If you take a look at the Nasdaq daily, still contending with support potentially at this level. Obviously, and it's important to remember, obviously if we break and trade here, the market is gonna see a very sharp decline. As long as we hold above that level, the market should be okay. Remember, we are testing or seem to be testing this breakout here, which is currently holding. We are also trading very close to the 50-day moving average, which could turn out to be an area of support. So nothing much has changed on the Nasdaq daily. A quick look at the Dow weekly, and this line we talked about yesterday continues to offer the possibility of support over the next 1, 2, 3 weeks. If it can bounce off this level, that's going to be all the support you need to see on the weekly chart for the Dow. On the Dow daily, we see that just like we had some type of support here, which was this lows, it is very possible that eventually the market can move above this line here, confirming this is another level of resistance right there. So this is not out of the question. Also, we are trading at the 200-day moving average. We can expect to see either a market bounce off this level, and also we have to be very open, because if the market trades below the 200-day moving average here, that's very bearish. If the market is continue to trade in this general area, that's going to be a bearish signal also. So a bounce can come from even today's down day, but we have to be careful. Further slide starts damaging the charts. Take a look at the Dow, and this is an hourly, and we see that still we've already seen the buy signal. In my opinion, the buy signal has come on the RSI, which tends to give you an earlier signal from the uniform activity here. We are trading at the green line. This green line here has been support. All the market needs to do is climb above that. It closed at those lows. Remember, we are making improving technicals on the hourly while we continue making lower lows on the hourly, a sign of potentially that the next move is going to be up. You can see this very clearly on the 30-minute chart for the Dow. Lower lows, improving technicals. If that's the case, then eventually we might get out of this bullish wedge. and spike to the upside. So as far as the charts are concerned on the 30-minute, if the market can continue making higher highs as the prices are making lower lows, the market should be okay. Take a look at the transportation index, and we've been expecting support here. Support is not coming, and so we can say that unless we get an immediate bounce over the next few days, if the market was to slide and break these lows on the support line and trade in this red area, that's going to be a material breach. Don't forget that we could still have support coming from this line here, which is very close to where the market is trading. So that trend line could still be in effect. So I would still expect this market not to be broken, because all it needs to do here is over the next couple of days is form something like that, or some type of uniform action, and the market will be giving us a buy signal as of right now. More evidence of the Dow Transports potentially moving higher can be seen from this green line, which is where we've been expecting support. So if it can move above that level there, it should continue having a nice bounce. So I think as of right now, unless we break materially from this formation, the market could still move higher from the way the RSI is setting up. S&P 500, we've been expecting this secondary level of support to hold, and it is this general area here. And why is that critical? Is because if you go back and find the most recent move in the market, comes from this lows here, entry point being here, which was this lows. And so we've tested that line once, which is here, nice entry point. And so you see here what we are doing potentially is trying to hold that line. If we break that support possibility, we go down. Also, don't forget that we are very close to moving below 30.90. Should the market move below 30.90, suggesting that it's going to be trading here, that's going to be very bearish and could suggest that the market is now in some type of a bearish tone. Now, if you take a look at the daily, consider that the previous daily closing high was here, or you can draw somewhere there. We haven't broken this level here. This level also happens to coincide here with the upward trending trend line there. So we could still trend lower slightly and still hold those levels there. So multiple levels of resistance, but we need to watch this RSI here for the market to hold or to break, because I think if we can get a rebound that looks something like that back above this line, then this is where you want to go long, just as the charts look like they want to break. If you take a look at the hourly for the S&P 500, we've already seen support because we are trading above this green line here and also trading above that line there. So that is back above that level. We saw uniform activity here, and now we are back above those two lines. My thinking as of right now, I still continue thinking the market makes a higher high, or at least moves higher because of this lower lows, improving technicals scenario. Now let's go to the VIX, and we can see that the VIX on the weekly, as I was showing you, is still showing resistance on this level here, which would be negative for the VIX, bullish for the market. On the daily, we need to take note of the new buy point for the VIX, which is $17. $17. Anything above $17 on the VIX would suggest that the market is making a higher daily closing high over the last couple of months, because this is going to be a new daily closing high. So 17 is where it closed at the highs recently. If it can break out above that, wow, then the market could actually be punching to the upside. So we'll need to see that. Right now I see that this continues being resistance level, and so I would expect, my thinking is, given the information right now, before we see any potential for a breakout above 17, is that this market actually does break down by continuing to move down here, suggesting the market should be in play. The reason why I say that is, if I take a look at the VIX, you see that this is uniform activity above that red line and back below it. So I think this is already a sell signal. Eventually prices are going to move lower. Now one more, which is for the GLD. Remember, this is just a recap of yesterday's video. We see the GLD adding on slightly, and we already bounced off the 50-day moving average. We already bounced off the 200-day moving average. I would expect this thing to be slightly positive because this is where it's been bouncing on this line here. We're expecting a bounce from this line. We got that bounce yesterday. And also, if you extend this line, you see that it was the other better entry point was here, beginning of 2014. And also support here, which was here, support here, which is here. So